that time again. I know we just put out our last net worth update just before this, but that one was a little late, so we're catching up.
In this video, we're going to be talking about our net worth update. I'm not sure for what quarter. Quarter 4 of 2021, 2022.
Homie don't even know what year we in, bro.
2022, quarter 4. Do you think that you're going to like the progress or not progress that we're going to reveal in this video?
Yeah, let's see what December surprises had in store.
Hey Wealth Builders! Welcome back to another episode of The Bemused. My name is Misha.
And I'm Akiva.
And on this channel, we talk about all things personal finance for young adults just like you and us.
So if you're into that kind of thing, come on and join the family by hitting that big red subscribe button. And while you're at it, click that notification bell so you don't miss new fun videos just like this one.
And if you're a regular viewer, you know that we will be looking down just to check the numbers to make sure we're giving accurate information, so we apologize in advance. So we're going to start, like always, with our assets. So we have cash. We had $99,851 in cash. We almost had $100K in the bank. Like that's crazy.
We'll talk about that more when we get to change in net worth, but like that number is just, it's crazy to me.
Yeah, never like, and I guess because it's all over the place also, like
it doesn't feel like
I didn't notice that we had that much cash, but it's like, damn, bro, we had some bank.
Yeah.
Then for receivables, we have nothing there. So that was a line item that was there in the previous quarter. We keep it. For those of you who don't know, receivables is money that we expect to receive at some point, but we don't have at that moment, but we're just, putting it on there. So that's what that is. Don't have any this quarter. Liquid investments and retirement plans. That is $90,055. Again, lot of money. Like we had almost another $100,000, about $10,000 shy in our retirement accounts and liquid investments. That's amazing to me. Like I don't see these numbers also beforehand, so I'm always just as shocked as you all, because I know nothing. Akiva is the one who puts all of this together, so I'm just as shocked as you are. Next, we have our home, where we keep that the same. It's $242,000. While we do believe, and I say this every quarter, while we do believe that we could sell our home and get a little bit more for it, and in this market, who knows, but in the past, we know that we could get a little bit more. We keep it at what we paid for it, because we know that at the very least, that's how much we would sell it for. Then going down to personal property. I think this time there's a little bit of a change because...
No, last time we already had.
Oh, okay. Never mind. So, not a change. Like last quarter, we had one vehicle and we have one as well. We haven't purchased another one yet. Coming at some point in the very far future. But
okay, that's what I thought. Like news to me.
But the car that we do have was valued at $8,430 as of December 31st. That's where all these numbers were pulled from. So if you're doing some math, you know that the total assets for quarter 4 is $440,335. It's a lot of money. That's almost $500,000.
In assets.
In assets.
Okay, let's quickly go to the debt section where we start to reduce.
I just wanna have a party for that. Like almost $500,000 in assets. That's crazy.
Yeah, that didn't click for me either until you just said it out loud. I'm like, they hadn't clicked. Yeah, we're really close. Pretty close. All right, let's talk about all the things that we owe. Okay, all the people we owe. Who do we owe? We owe some bank. Right? Our mortgage, yeah. We do owe somebody that. So right now, our mortgage balance stands at $220,661. So as you see, we have about 20-odd thousand worth of equity in our home right now. When you take how much the home is worth minus how much we owe on it. Our second debt is credit cards. Now, if you're new around here, we do not maintain credit card debt. That is not a thing in this household. We just put the amount of money that was currently owed on our credit cards. All of our credit cards combined, I think we have 9 now. He had a new credit card this quarter as well. So a new credit card came into the mix, and so between our 9 credit cards combined, this was our total balance as of December 31st. Again, we pay our cards off in full every month, no issue, but we always want to account for the money that has already basically been spoken for. So that's credit cards. Then our second largest debt, our student loans, that balance currently stands at $71,825. We'll talk about the changes in just a second, if that's gone up, gone down, what the situation is. But that brings our total liabilities to $293,389. So when you take all of our assets, subtract all our liabilities, our total net worth stands at $146,946. Wow, a lot of sixes and fours in this number today. But I'm like, that's ridiculously close to 150 grand, which is crazy because I feel like we just hit 100 grand like not too long ago. So again, we're talking about feelings. Let's actually flip to the change in net worth and talk about what actually happened between September 30th and December 31st. A lot has happened, FYI, that has resulted in this change in net worth, which definitely has gone in the positive direction. Spoiler alert.
All right, so we're going to start with our assets once again. So for assets, we start with cash reserves. So we saw a 24% increase, which is $19,393. And we know that that's a lot of cash. And we got this comment on the last couple of videos where we were hoarding a lot of money and all that sort of stuff.
As you see, we are now having more money if it wasn't already a lot. But there are reasons, okay?
Yes.
Let's take some time because it's been a while since we actually got that "you guys have too much cash" comment. So let's actually explain how we ended up here, okay? Because I promise it's mostly good reasons.
So we have a $25,000 sinking fund.
Yeah, specifically earmarked for a anticipated big life change, hopefully the next year or two. So it's just a sinking fund that we just finished up that we are keeping in cash. So that's already 25% of our cash right there.
Then we also have $13,500 that we're saving for student loans because, as you know, at the time of this recording, student loans have been extended again, and it's a little hazy on that date, but we're saying for our purposes that that's going to be like, you know, somewhere around September, October of the year is when we'll have to start paying the loans again. So we have that money just waiting for whenever they do lift it, we can make a lump sum payment. So that will literally all go in one swoop. Imagine that we will spend over $13,000 in like less than 5 minutes. I mean,
more than that at that point too,
yeah.
because we're continuing to put money aside for our student loans. So
yeah, so crazy. Then we also have $10,000 that's put aside for our emergency fund.
Part of our emergency fund.
Yeah, part of our emergency fund. Then we also have $20,000 in our business bank account.
Yeah, so I'm wondering if we should break that out in future net worth updates. Because it is cash, like we are the business, the business is us. It's not like it's a separate entity or anything like that.
No LLCs.
So it's no LLCs, no fancy stuff like that. No shade. But like we just have like 20 grand sitting in our business bank account right now. So all of that is like part of our cash reserve. So that number does fluctuate wildly, actually, depending on what we have going on in the business. There's seasons where we're spending a lot in the business, seasons where we're making a lot in the business. So that ebbs and flows, but as of right now, that's how much is in the account as of December 31st. So all that combined amounts to almost 70% of the cash that we actually have. Yeah. So hopefully I give you some more insight as to why in the world we have
all that
so much cash.
It's for a reason. We're not just hoarders.
Yeah.
Then on to our receivables. So our receivables saw a 100% decrease, which is actually a good thing because that means that there's no money out there that's lingering that people owe us. So that's great. So that dollar amount was $3,828. That's how much was on there last quarter that we were waiting on some funds to come in. So like I said, good thing for that. Then we go down to liquid investments and retirement plans. And this is really nice because we had a 16% increase and the dollar amount associated with that 16% increase is $12,368. And that is solely due to the market just rebounding, which is great thing. I mean, not solely.
We contributed a lot,
yes,
too.
We contributed. We increased our contributions. Well, more so you, because mine was already at 15% all in with employer, what I'm contributing. But Akiva increased hers to match my 15%. So we're both doing 15%.
That might have been a couple quarters ago, but yeah, something about that. But also, it was in large part because the markets rebounded. Last quarter, the markets were, I said in large part, not solely because of the markets rebounding. We did put money in there too. Okay, I know what I'm saying. But yeah, so last quarter, the markets were doing absolutely terrible. So our portfolio was down. Basically, we gained nothing. Like, it took out everything we contributed, right? Plus some. So this quarter, it was nice to see that the markets did rebound a little bit. Now, they have backed a little bit since the start of the year, but that's okay, right? We're long-term investors. We're not here checking on this every day. I literally check this when it's time to put these together every quarter. So that's fine with us. But nice to see that we've hit a new kind of milestone with our investment balances. 90 grand, y'all. We're getting there. We're getting somewhere.
Then the next item is our home. No change there. So 0% change, which is good, some people might say. And we have that because we're holding the purchase price of the home pretty much straight through. So no, we're not going to see any changes on that line item, and that's okay. Then for our car, ebbs and flows, and the numbers that we present to you guys are based off of the Kelley Blue Book value
Blue Book.
Based off of
another company.
Based off of the value that we're able to pull at that moment to give you a accurate number. So it flows, ebbs and flows. So this quarter we saw a 3% decrease in the value of the vehicle, and that a dollar amount equates to $270. So not too much of a decline there. So that brings our total asset change from one quarter to the next to be about a 7% increase. So we still saw an increase, even though there was a few things that saw a big dip. And the dollar amount of that increase is $27,663. That's a lot. So, again, almost $30,000 in one quarter.
3 months,
That's a lot. That is a lot. Wow.
Liabilities. Not too much of a change here. Really small changes, but changes nonetheless. Our mortgage, same old, same old. I swear every quarter is that literal 1% every single quarter, right? Because we are in no rush to pay down our mortgage. We've said this before and we'll say it again, right? We are slow paying this thing. Our full 30 years. Interest rate is really, really great, really low, so we're just paying that according to plan. So this quarter we reduced the principal balance by $1,288, and so that equates to the same 1% we continue to see quarter after quarter. Credit cards, again, that's neither here nor there, just happens to be where the wind blows that day, and as of that day we had less on credit cards than this time last quarter, so that is a decrease in liabilities of $550. And then student loans, you'll see that balance also went down as well by $200. Now, how did the student loan balance go down if we're not making any payments like we just said? So we probably mentioned this in the last video, but my now former employer, that's gonna be a whole nother video for a whole nother day, was giving $100 towards student loans. And so I left my job in November, at the end of November, and so they gave me my $100 for October and my $100 for November. So that's why it went down by $200 in the quarter, although we personally didn't make payments. So that is how that's doing right now. So our liabilities in total went down by $2,038, 1%, but all in all, our net worth increased almost $30,000, y'all. $29,701, increase of 25 freaking percent in one quarter. Wild!
As you can see, we're definitely storing a lot of cash away, but outside of that, storing the cash, which is really helping offset this, also something is I think what also is happening is we're kind of increasing what we're bringing in as opposed to what we're paying out, and that's really what's helping us so much.
Yes. I will say 2022, I haven't finished our tax return yet, but I started it, and once I added up all of our income, 2022 was definitely by far our highest income year.
So far.
Yes. But y'all, we cleaned up. I was shook when I put the numbers together. I was like, we made that much money? Where did it all go? I kind of felt like, where did it all go? But it's helping us make changes like these, right? It's a really great tool to have in your arsenal. You can do a lot of damage without making a whole bunch of money, which is what we have continued to say and what we've continued to illustrate. But as we have increased our income over the past couple of years, I would say, and put a concerted effort into increasing our incomes, we have definitely seen the benefits as well. So please don't feel like, there's nothing that you can do if you don't make a lot of money. We have done some serious damage in the past, and that's legitimately what our webinar is about, that we're always telling you about, right? That's what it's called, Financial Freedom Formula, how to build wealth without a six-figure salary, because that's what we've been doing up until this point, right? Really, 2022 was really the abnormal year, and actually 2023 we actually think we're gonna make less money than 2022. We'll talk about that in another video. But definitely check out that webinar if you haven't yet. What are you waiting for? Like, it's the best thing since sliced bread. So the link will be down in the description below, also in the cards. But just to also wrap this up, showing you how far we've come, right? Crazy, almost 150 grand when, you know, we were at a negative net worth all the way as recently as the end of 2020, beginning of 2021, yeah. On March 31st, 2021, we were still sitting at a negative net worth, y'all. So in less than 2 years, we've increased our net worth by like 160 grand.
And I'm gonna go out on a limb here and challenge you to have that difficult conversation like we did how many years ago, and put pen to paper, put your numbers down and calculate what your net worth is. It's something that we really encourage you to do because it's good to know your number, right? Not necessarily to glow or to show it off, but
or
just
to feel discouraged because it might be
exactly.
hella negative like ours was when we first started. You can go back to our first video, super negative, right?
But it's really important to wrap your arms around your numbers and really come up with a plan that works for you on how you're going to improve that in whatever your time frame is. Because when we started this, it wasn't really about improving so much, just about just knowing. Like, yes, you know, you want to improve, obviously, but it was just knowing what our numbers were, and then from there, I'd be lying to you if I said that we sat down and said we need to become net worth positive. So we did not do that at all. We just focus on doing what we love, which is making videos for you guys, working really hard, and keeping the same habits that we've all already had before that. Not spending a lot on certain things, choosing what we spend strategically on, and really being smart with our cash and what we spend our money on. And you know, as our earnings increased, then I think that we just started to reap the rewards of everything that we were already doing. So now it's just all coming together, where for me it's beautiful to see, where imagine what we could have done if we were actually being intentional about trying to get out of a net worth negative situation. So hopefully that inspires you, like I said, but get your arms around those numbers. I think that that's the best first step. We want to thank you so much for watching this video, for staying all the way to the end. If you have, again, I invite you to put your net worth down in the comments if you are so brave to, you know, get yourself around those numbers. Share that with us. We want to have a community of people who can share their money wins, their money losses, and where we can just encourage each other to get better with them. That's really what it's all about. Thanks again for watching, even though I said that already. Don't forget to subscribe and click that notification bell so that you never miss when we post great content just like this. We'll see you in the next one. Bye.